Hey everybody, I hope everyone is doing well and had a good day. Thank you for joining me for today's end of day review for Wednesday, December 3rd, 2025. And before we get into the 5-minute, just quickly want to talk about the daily chart, the context going into the day. I think it's helpful to consider what's possible, what's likely for the day type, the day structure going into the day based on the higher time frame. And if we look, this is the daily chart. This is the regular trading hours session, so we have more gaps. This is showing the daily chart without the extended trading hours, so without the Globex session. We have a three-legged correction down to a double bottom support. We're all in a big bull trend. And if we think about the market cycle and typical market behavior, after you get a wedge, you typically get a correction that lasts about 10 bars and 2 legs on the highest time frame that the wedge is visible. So here we see clearly 3 pushes down. Maybe the Globex chart will be easier to see it. 1, pull back, 2, pull back, 3 legs down. So my general expectation is a couple of legs sideways to up, lasting at least 10 bars. But the big picture context, like I said, is a bull trend followed by a trading range, and it's possible this is a big double bottom, basically a high to pullback in the bull trend. And this looks like fairly strong trend resumption. So the bear's hoping this is evolving into a trading range, maybe even a major reversal into an opposite trend, but this looks fairly strong. Looks like it needs a second leg up of its own, and it might be trend resumption. Trends have periods of trending behavior, breakouts, and of trading range behavior, pullbacks. So if we look at, let's say, maybe the 60-minute chart, we have volatility expansion, volatility contraction. Probably we'll get volatility expansion in the direction of the trend preceding the trading range. So when there's a trading range, breakout direction becomes about 50-50, with the trend before the trading range having more of an influence on breakout direction. So if it's a bull trend before the trading range, there's a slightly higher probability of a bull breakout after this trading range, and this trading range becomes a bull flag. So bull trend, bull flag, trend resumption. With all that said, my expectations going into the day, pretty strong buying through here, very little selling pressure, 3 legs down, and overall might be a bull trend. It's that or a wide trading range, but we still probably need a second leg up. Is this a major reversal with one bear bar in after a 5-bar micro channel with open gaps, bars closing on their highs above the highs of the prior bar? Pretty strong bull breakout, probably a minor reversal. So I'm not expecting a major reversal or any kind of bear trend today. I'm expecting a trading range day and probably a more bullish trading range day, if not another bull trend day. So I think least likely is a bear trend day, and then more likely some kind of a bull trading range day or a bull trend day. On the open, we had a trading range on the open. Trading range day yesterday with support in this area, we'll call it the close of Monday, acting as support. Every time the market comes down to this price, it rallies, tries to break below, rallies again, tries to break below, reverses up. And now we're gapping down with 2 legs down to the bottom of the trading range. Leg 1, pullback. Leg 2, trading range open. So this is basically bar 3, a low 1 short at the bottom of a trading range, where the market is displaying support. Every time we test this price, the market rallies. So is this a good area to be selling? Probably not. If you're selling, you need momentum immediately because you're selling leg 2 low in a trading range. So if there's any stalling, if you're a bear and you don't get immediate follow through, probably need to exit the trade. So reversal bar 5, safe for bears to exit above, and okay stop order for the bulls to buy. You can call it a high 3, high 1, high 2, high 3, or if you reset the count here, high 1, pullback, high 2, second reversal, low in a trading range. So reasonable to buy above 5, to go long, or to take profits on shorts. And then surprise bar 7. So tight trading range on the open, with the tails of the bars roughly being the range, but it's also a trading range in the big picture with resistance up here. So as far as buying bar 7, it's not ideal, even though it's a strong enough reversal that the bulls are probably going to get a second leg up, but it's not a good location to buy because you're at resistance. You're in the sell zone of the trading range. So market testing open gaps, resistance, sell zone of a trading range. Whenever you see a trading range, you should be thinking buy low, sell high. The market's currently high. So yes, there's momentum from the bulls, 3-bar micro channel, covering a pretty big distance, but location here, not good for buying. Better to scale in, or if you do buy, scale in lower, or simply wait to buy lower. Big reversal down, bar 8, but still not even half the range of the micro channel. So probably minor, probably buyers below 8, second leg up still likely. What about 12, double top with bar 8 and bar 12, but a weak. It's a nested low 2, maybe even a low 3. So low 1 below 8, low 2 below 10, low 3 below 12. But it's a doji bar, and like I said, bar 8, relatively small reversal compared to the rally. And the bears even got a small second leg. There's a breakout or reversal, pullback, and then a second leg down to the low of bar 11. Structurally, this is a problem for the bulls. It's 3 pushes up, 1, 2, 3 legs up to resistance. But as far as a stop order sell, I don't think 12 is strong enough. I think bulls can stay long, and bears are looking to sell higher. So, okay to be long, but you have to be willing to scale in lower if the trade goes against you. And then outside up 13, but now more clearly 3 legs up to resistance. So 13 might be a profit maximizing bar. You can expect a minor reversal. It's tight enough that this might be a breakout on a higher time frame, so you can expect a minor reversal and then a subsequent leg up. So maybe a 2-legged correction after 13, and then look for a little more up for the bulls. So 2-legged correction, bar 18, setting up a high 2, but it's a high 2 at the top of a trading range. It's okay to buy a high 2 near the high of the day if it's a bull trend, but if it's a trading range, you want to do the opposite. So buying here, probably not ideal because of the context. To me, it looks like a trading range, not a bull trend. At this instant, we might have a couple of open gaps. Bull breakout here, open gap. Bull breakout here, open gap. But testing resistance, late leg, probably leg 4, bar 19. So the upside here, probably limited. It's a late leg in the sell zone of a trading range. So rather than 19 being a buy signal, it might actually be a sell signal. So 2-bar reversal, bar 20, strong enough for a second leg down. The only problem with 20 is that it might be a third attempt. So here's 21, and you can draw a channel line. So it's 3 pushes down, testing breakout point. Again, it's a tight channel. This entire rally is a breakout on a higher time frame. This might just be a minor reversal, wedge bull flag, and lead to a test of the highs. But bull breakout and bad follow through. So it's tight trading range here. Another breakout to a new high, bar 25. But same problem as 13, 19, and 25. It's all the same problem. It's a late leg at the channel line, high in a trading range. So 19, good looking bull bar, but bad context, led to a bear reversal. 25, strong looking bull bar, but bad context, might be a better sell the close bar than a buy the close bar. Bad follow through. 26, reasonable for bulls to exit below 26, maybe wait for a correction because we've had several legs up. Market's probably going to correct, test the trend line before going higher. So 29 might simply be the test of that trend line. It's a stronger bear bar, increasing momentum, but testing a breakout point and the trend line support. So maybe not ideal to be selling here, but this is strong enough down for a second leg. And then even further breaking lower below the trend line, good for the bears. Problem is similar to 21. It might just be an expanding triangle in a bull flag in a bull trend. Problem here, is it a trading range? Is it a trend? It's not all that clear. You can make arguments for both cases. So it's a bull channel. We have higher highs, higher lows. So you can call it a bull trend. But it's also a trading range. You look to the left, and the market is basically horizontal. Big up, big down, big up, big down. Traders are buying low and selling high. So up here, probably better to look to sell. And strong enough reversal down for a second leg. But like I said, the risk is that it's already a late leg to support. But this is still strong enough that even if it is a late leg, it'll probably at a small second leg. 31, disappointing for the bears, and a reversal up from the trend line. So strong bar, probably buys below, second leg up likely. So bears getting their second leg, but disappointed by bar 31. They may just use 32 to exit shorts and look to sell higher. And then the market rallies. So everybody buys here. Bears disappointed by the reversal back up, use 32 to buy back shorts, and bulls see another breakout near the trend line in a bull channel, and they also buy the pullback and capture the second leg. Now we're back at resistance, the channel line. So upside here, probably limited. The channel continues, it's a tight channel, breakout, probably get a minor reversal and another leg up. Bears hoping it's a midday reversal, that's where around bar 40. You can count several legs up in the channel. Bears hoping it's a trading range day and maybe a reversal day. So maybe a spike in channel for the first half of the day, followed by a midday reversal. We come back and close near the open. But have the bears done enough? Is there enough selling pressure through here for a reversal? 46, 47 is a decent pair of bear bars, but not especially big and completely above the moving average. So bears need one more bar. They don't get it. It's strong enough for a second leg, but there are traders now trapped here, and that creates support. So 54 might be a late second leg. Leg 1, deep pullback. Leg 2, 54, good looking bar, but testing breakout point, testing the moving average. So probably buyers in this area, downside limited. And the market tests back to the high. Bull channel continuing. So it looks like the market is obeying this bull channel. With the channel line acting as resistance and the trend line acting as support. So still contained within the channel lines. Maybe getting a sideways breakout, which is a weaker form of a trend line break. It would be stronger for the bears if it broke more down rather than sideways. But a sideways trend line break is also a trend line break. So good for the bears, but not as strong as it could be. Probably simply evolving into a trading range. So probably support around the close and the low of 54. The spike in channel evolving into a trading range. Possible second leg trap, leg 1 pullback, leg 2 testing support. So as big as bar 77 is, it might be a vacuum test of support in a developing trading range. So spike in channel, the channel evolves into a trading range, 77 is testing support, and in a trading range you want to buy low, sell high. So big bear bar, but big risk, big bar, big risk, and add support in context. Not great for selling, probably more of a buy the close bar, but also late in the day. So really, realistically, not worth trading those bars. And that's going to be it for the end of day review. If you made it all the way to the end of the video, you're probably a serious trader. And if you want to go deeper into price action and systematic trading, I post extra videos inside the channel membership, and you can find a link to it in the description of my videos. But if not, that is also totally fine. So thanks for watching, and I hope everyone has a great night.